Welcome to The Sound of Economics, the podcast series by Bruegel, the Brussels-based economic think tank. I'm Giuseppe Porcaro.
I'm Alicia Garcia Herrero.
And today we will discuss the state of China's economy ahead of the autumn, looking back at the previous month of these years and making a first assessment about the direction of course. This episode is part of Bruegel's focus on global China as seen from Europe, which includes our monthly newsletter ZhōngHuá Mundus, to which we invite you to subscribe, and the link is in the show notes. Today, I'm happy to host Xu Sitao, who is the chief economist and partner of Deloitte China, and he is joining us from Shanghai. Hi, Sitao, how are you?
Good, how are you? Good to be here.
Very well. Thanks for joining us. You are well placed to give us an insight from the ground about this first half of the year and what to expect next. China's latest data for July points to a much more poor economic situation than expected after an improvement in June, very much linked to the lockdowns which were lifted in Shanghai and to a lesser extent in Beijing. We have seen a GDP growth plummeting only to 0.4% year to year in Q2 2022, and that has been the worst performance after Q1 2020, when the first wave of COVID-19 hit Wuhan. And China's manufacturing and non-manufacturing purchase managers index dropped massively in April. Plus, consumption has also been hit by the lockdowns. So what is happening? Why sentiment is so poor?
Well, first of all, as you have correctly stated, July economic data in general less inspiring, naturally prompt adjustment of analysts and economists just in terms of GDP growth. I haven't done that yet. I suspect the second half rebound remains on track, but given the tricky situation of COVID policy, the more vigorous rebound might be in Q4 instead of Q3. But overall, I still believe we have seen cyclical trough. I still think the policymakers have certain policy leeways, which in general do not exist in most emerging markets. I still think consumers are quite resilient. As a matter of fact, as I speak to you, I'm in Shanghai. Before the lockdown, I came here not on a weekly basis, maybe every 2 weeks. This is my first visit to Shanghai since mid-March this year. And you know what happened between late March and late June. And I can tell you, business is as normal in Shanghai. But of course, there's still a lot of room for making the existing COVID policy more optimal.
Thank you. I would like to hear the impressions from Alicia's first reactions from your overview. And as you say, you are there in Shanghai and you are watching the things as they are in the streets and in the business world. So that's very interesting for our listeners to understand better.
First of all, thank you, Sita, for being with us. You're such a famous economist, and not only that, you are there where the action is. So I'm sure you know better than many others, including myself, who talk about China, but actually isn't there. And we've not been there for a while. So, we need to recognize that that's a big gap. But having said that, I'd like to come back to basically putting your comments on the situation in July, the data we had in July, in the context of what has happened in China since COVID, unfortunately, hit all of us. In the case of China, even earlier, January 2020. So the story goes like we had this first in, first out story. So, 2020 was actually quite positive, other than obviously January, February, March already getting better in terms of mobility. Actually, mobility in March 2020 was better than mobility in May 2022. So, it's kind of ironic that first in, first out ended up being first in, but lagging in the way out of COVID. And COVID is not of course, is a humongous drag on consumption everywhere in the world. China is no exception. But you're right to say that this resilience, because retail sales still grow positive, it could be worse. It could be, a recession. But we don't have that in China, and I think we need to recognize that. There are, however, other shocks or other challenges that China is experiencing beyond the reduced mobility that in a way worry me, I would say even more because they are longer in duration, such as the real estate sector. We hear again in Sichuan province about hydropower, rationing of basically power because of the very hot temperatures there. I mean, things that we've heard about that are coming back. We heard about Evergrande last year in summer, we're back. So for me, I like to hear more about, yes, the data we could discuss is negative, but maybe not so negative. I'm fine with that. It's not a big issue because, again, China will grow, maybe not target, but decently, given the circumstances. But the question is, what about 2023? Let's forget about this year. Let's think about what are these challenges. These challenges ahead. What can China do? You mentioned that there is space. The fiscal and monetary authorities, I imagine, you referred to demand policies have space. I'd like to hear more about that. How much space and how big are those shocks? How big is the space? What may happen in 2023? That's basically, for me, the core of the matter, even more than this year by now.
Okay, so maybe we just look at several questions, but not all the time, because I think it's better for us just to focus on one question, because otherwise the conversation may become lengthy, right? So I think, first of all, China's external sector has performed much stronger than almost everyone has anticipated since COVID broke out. In fact, this became almost a guessing game every month when we look at trade data, export growth. So despite all these talks on supply chain reconfiguration or China plus one, story on India, Vietnam, and Indonesia eating China's lunch in manufacturing, and so far, China's export machine continuing to perform strongly. Secondly, despite all these problems, which were being widely covered by press on real estate sector, I think the issue for real estate sector, I would attribute that to a mismatch between asset and liability, not solvency issue. So I think that's important. In the end, some households are boycotting payment. They are not defaulting, right? So that's the difference between China's real estate sector and subprime crisis in the US or saving and loan crisis many years ago. I also think, this is just a fact, we are in the period of this super strong of US dollar almost against every currency. And, China's currency, I would say, is second strongest in the world against all major currencies. So that allows central bank to cut interest rate. I'm not saying cutting interest rate is going to be effective, but at least China is not in the same situation as many emerging markets. Just you need to scramble. You either have to defend your currency or you suffer from balance of payment crisis. So all in all, I would say you got consumers and you got a reasonably strong external sector. So I think, yes, this year we know the growth target won't be met. But I think next year, the growth will be better. Of course, in order for China to restore, not previously, but even about 5% growth rate, tough reform must be undertaken. And we can talk about that later. But maybe just to respond Alicia's comment, I just make a few points.
Sitao, you mentioned in one of the comments, because of Alicia's mentioning Evergrande and the real estate sector. And you mentioned that this what's going on, it's very different from what happened in the United States back in 2007. So those are mortgage boycotts. So they are done, let's say, consciously, not because they are defaults. I think that for most of our listeners, because the Sound of Economics is very much listened in Europe and the United States itself, it will be interesting to understand a little bit more what's going on and what kind of impact and this is having in the current situation. Yeah.
Okay, maybe I keep this very simple. So as a home owner or future homeowner, you put down some payment notional amount. For example, in the US, UK, or even Hong Kong, any mature market, if the property not being delivered, you don't pay. But in China, property market has been in this growth phase in past 15 years. So it's quite normal for people just to put down a down payment and start paying mortgage. Even the final product is only a picture on the brochure. So you may attribute that to consumers' naivety or consumers' leap of faith, because so far the market has been going up very strongly. For example, where I am in Shanghai, in past 20 years, I would say the property prices have gone up by easily 20 times. So you just do not see this kind of magnitude of appreciation. So as you can imagine, if companies such like Evergrande or smaller developers, if they have defaulted their overseas bond payment and they run out of money to finish unfinished project, home buyers are naturally nervous. So they stop paying mortgage. So that's mortgage boycott. But this scenario clearly won't take place even in Hong Kong or a mature housing market. Did I explain that clearly?
It is clear to me. I mean, my question is, what's going on at the moment is just a boycott, like, let's say, a pattern from the people buying real estate that is closer to the one of mature markets. So they are waiting for the product to be delivered in order to start to pay the mortgage. Or is there something that is impacting the overall? And then, of course, there is a problem of liquidity linked to that. Or is there really a movement of boycott against the real estate sector at the moment, which has an impact in the overall economy?
Yeah, first of all, sorry for interrupting. I mean, this is a cliche when people say it's all about location. Same in China. China is a big market. There's no such thing of national market. Some regional market have been very, very strong. Second, some regional market have seen in doldrum because less favorable demographic profile. So the mortgage boycott mainly taking place in area where you have net population outflow. You also have, just less compelling industrial structure. And of course, you also have smaller developers who are struggling in terms of cash flows to finish the project. So I would say it's not a nationwide phenomenon. It's taking place in a few provinces.
Maybe, Giuseppe, I can add, because, again, to put this in the context of the European and global listeners and what we're talking about here, I think we should remind the audience that last summer, a number of developers, one of which Evergrande with 300 billion debt, defaulted. And we've seen a series of defaults, Sunak, other smaller real estate developers. I have to say that they're also quite good developers in China. They don't all look alike. And in fact, the Chinese government has just announced a partial support for the issuance of bonds of those good developers. So, some are being helped, but possibly without much moral hazard because these are the good developers. But the others are still in the doldrums. We don't have financial statements. Evergrande has not yet announced a restructuring. I mean, it's a tough situation. Only Evergrande, and there's many others out there in the same situation as I mentioned, has as much as 1.3 million housing units which have not been finalized. So this is where the mortgage boycott comes to play, is that people will not want to pay, rightly so, or continue to pay their mortgages for properties that have not been finalized on time and might never be. Why might they never be? Because developers in China, this is even true for the good developers that I was referring to, get around 80% of their funding from pre-sales. So from these people that are partially now coming and saying, I'm sorry, where's my money? And by the way, I'm not going to pay my mortgage because I have nothing in exchange. Is this a systemic problem? My answer is the mortgage part. Not really. Why? Because first, the down payment is huge. So why would you stop paying your mortgage if the down payment is huge? Unless you have no chance, basically, of not getting your property. As we know now, these boycotts have mainly concentrated in those developer units, those developers that are bankrupt, Evergrande being 70% of them and others. So it's not yet a general trend that people just say, look, here are the keys, because prices, which by the way is already happening, over 50% of Chinese cities are seeing reductions in price, not a deceleration, reductions in price. So it is not yet happening, and I don't think it's going to happen that people will give the keys and say, sorry, I'm running because the price is too low, because the price needs to fall 40% for them to even think of this, because the down payment is humongous. So it is, of course, not the US. That's very clear. But those developers are not small. Yeah, I mean, China, so the share of the construction sector, developers as such, in China's listed assets is 20%. This is 4 times the US. It's a bloated sector. Let's face it, it's humongous, even for China. It's 1/3 of fixed asset investment, 1/3 of China's growth when you take into account other sectors that contribute to the real estate, whether it's, furniture, you name it. So it's big. And I think that's the risk is not a systemic, whatever, a run on deposits, nobody pay mortgages or anything like that. The risk is lower growth because the sector is so big. So I think this is what I wanted to clarify on this topic, but happy to hear from ZhōngHuá.
I think, first of all, Alicia and I both agree there's no systemic risk. I would like to state that again. Secondly, both of us, we think the sector itself has to be shrunk going forward. I think on this, there is a risk. Earlier, we have spent much time just to argue why China's property market is fundamentally different from subprime crisis in the United States. So maybe the comparisons can be made with Japan. Well, Japan was a creditor, just like China, right? So Japan never owes foreigners money like China. Japan has been consistent exporter of savings as China. But Japanese consumers' psyche has been changed in the wake of property bubble burst. Are we going to see the same episode as in Japan? Again, I'm taking a more optimistic view. Fundamental reason remains China is in catch-up phase, right? This is still economy with the per capita GDPs, more or less at the level of Brazil. So I'm not saying China will reach the income of developed countries, but let's say half of China. Can half of China, reach the income level of Spain and Portugal, where Alicia from? I think probably that's not a bad assumption, right? Much of the country is still in catch-up phase. And we also know China's financial market has been grossly inefficient, precisely because of that. So resources misallocation. But that's not just in China, that's in most of the emerging markets. So real estate markets build up or overbuild up is a consequence of inefficient financial market. It's not a cause. But again, if this sector previously was growing twice as fast as GDP growth, now in the next 12 months, it will be decelerating, it will be contracting. So that's indeed a challenge on growth. So no one has a perfect answer yet. But I do hope China can continue to deregulate the economy. China can tap into some of the regional trade framework. I mean, China can even liberalize a labor market. I mean, the reason I think I'm taking a less bearish view than many people, in the end, China is still work in progress, right? So I don't know whether Alicia share my sentiment. China is a work in progress.
Speaking about this work in progress, one important aspect and element when we discuss about the situation of the economy in the next 6 months or even later in the next year, one big element is also the political element, which I think has an impact on the economy, of course. So very soon in the fall, there is going to be the 20th National Congress of the Chinese Communist Party. And one question that analysts abroad are asking themselves is whether the fact that such a Congress is going to be held in the fall, like at the moment, is there any uncertainty related to the political situation that might have an impact on the economy? Or in general, what shall we expect from this?
Okay, first of all, answer your last question. So there are uncertainty on the Congress, whether it will be held. I can tell you there is zero uncertainty. It's a certainty. It will be held. And I think it will be held probably between late October to early November. The reason is there will be a very important meeting in Asia. I think in Bangkok, there's APEC meeting. I still think there is a good chance for President Xi to meet President Biden at the APEC meeting. But on a more interesting question or challenging question, the leadership transition and the key post, I will leave that to Alicia.
Thank you, ZhōngHuá. That's very kind of you.
You're welcome.
So, first of all, I was told when I was very young that there was no such thing as certainty. But of course, this was my mom. She probably never met anybody from the CCP. So, at CCP, there might be certainty. But the reality is that it doesn't really matter, if you see what I mean. Because black swans, we're not going to talk about black swans. Exactly because they are black swans, nobody knows. So on that basis, let's talk about certainty of that transition. But that's only part of the story. Because what people want to know, and I can tell you this is probably CEOs of, Fortune 500, including probably Chinese CEOs, they want to know what's going to happen next. They want to know whether a lot of the hustle, let's use that word, hustle, or maybe we can use Xi Jinping's own words, struggle, is going to calm down after the party Congress. In other words, what's going to happen with zero COVID policy? What's going to happen with this frenetic, and this is not China only, actually, I would say less so, but still frenetic strategic competition between China and the US. I mean, we could go on and on and on. So will the waters, put it this way, be calmer? And I'm talking about economics here. I mean, as an economist, should I see with more clarity, in terms of policies, way forward, pursuing reforms, opening up to start the border, and perhaps additional opening up of sectors after the party Congress? I guess that's the uncertainty that probably Giuseppe was talking about.
Okay. So let's talk about zero COVID policy, right? I understand this policy is very controversial. I think Alicia has been venting. She clearly feels frustrated for not able to make a London trip to China. So I think this is what I want to say, right? China is a big country. Cities such like Beijing, Shanghai, we call them first-tier cities. They are minority. So for most people, I think they are still very much for zero case policy. This is in China. That's the first point I would make. Secondly, I think the policy itself is being calibrated slowly but gradually. So, for example, taking COVID test, it's a lot easier, right? I basically view that as brushing my teeth, using bathroom. So this is your daily routine. So every 2-3 days, you do that. Now, there has been discussion to nationalize some of this mutual recognition. There's no reason for China not to do that, right? But we'll know in China, every province is competing with other provinces, just like European countries. So some of the development has been disappointing. But I think over time, they can be addressed. I also think after the party congress, the importance of hardcore economic issues will take center stage. Because in the short term, we will know domestic politics, just like in the United States, before the midterm election, is taking center stage. So I think there will be clarity. Now, on the Congress itself, I don't have a crystal ball, but maybe we can just look at some of the signals being sent out, even past a few days. For example, President Xi is in Shenyang, that's China's northeast. So I think to revitalize northeast is a policy priority. Prime Minister Li Keqiang was in Shenzhen yesterday because Shenzhen has been the trailblazer of China's opening up. And to paraphrase Li Keqiang, he said, if you look at Yangtze River or Yellow River, they cannot flow backward. So that's the economic treasure. So I think that kind of assuring message, being sent out. But I just hope people can understand in the short term. I think stability factor is indeed very important. So just like many companies in manufacturing sectors, I think that they've been very impressed by China's long-term planning, flawless execution, and all this compared to a country like India and the Philippines. But on COVID policy, maybe they are getting a bitter fruit of such efficiency. But you may also take a more philosophical view, right? If they don't get this, then you would draw the conclusion China's system is indeed flawless. We know that's not the case. As I said, since the country is still a work in progress, I would like to restate my core message. China is still in catch-up phase.
Alicia, so I think that Sitao gave us some hints about what's next.
Yeah. Well, on Sitao's point that I feel sorry that I can't visit China, absolutely, as many other people. But I have to say, I can't complain because I can go elsewhere, and unfortunately, that's not the case. Or in a very difficult way for anybody in the mainland, but even Hong Kong. So in that regard, I feel privileged. On a different note, though, this very important thing you said, Zita, which I really liked, which is the Yangtze River and the Yellow River cannot go backwards. I love that. I think Li Keqiang really brought back, the spirit of Deng Xiaoping to Shenzhen, which is very important. But Li Keqiang is, I don't want to say lame duck because that sounds a very democratic type concept. You're a lame duck because people, but he is, because he already said about a year ago he would not go any further. And I don't think he even can. Because I think the lifting of terms are only valid for the president. But the president is in the Rust Belt of China with common prosperity. So, there's these two, I don't want to use the word divergent because that's not really what I mean to say. These two objectives, is on the one hand, you open up your dynamic economy. On the other hand, you support common prosperity. And Li Keqiang has given us the signal as to what this means, which is that the strong provinces should be doing more growth-wise so that, so transfers, I imagine, or existing transfers, other provinces can withstand the pressure. Yeah. So nothing wrong with this. We Europeans do this all the time. Okay. I mean, this is part of our model. We share wealth. And some people say that's why we're not growing. Well, we like it because, it's in our core values, but it does have some consequence for dynamism. Yeah. For the dynamism of the group that we are ready to accept in Europe. So the question very briefly, because I know we need to bring it to a close. Will Chinese accept those consequences? Because there are consequences from redistribution policies, unless, again, you can do it marvelously well. So that's my question.
No, China is not ready to do what Europeans are doing. Europe has accumulated so much wealth over so many years. That's not something China can afford to do. Maybe what China can do is to define common prosperity in a more explicit manner. For me, common prosperity means you improve the likelihood of low-income household, you increase the fiscal spending on healthcare, and maybe make high school education free, and also means you bring down the barriers between provinces and taking concrete steps in not doing away residence permit system in one go. That takes time, but that will be the direction. So in a nutshell, to turn the Chinese economy into a genuine national economy. So that's my definition of common prosperity. And really, there's no reason for Northeast to struggle economically, right? Of course, weather is not ideal, but the whole region has so much natural resources. It used to be economic powerhouse 70, 80 years ago. So there's no reason for Northeast to be an economic laggard.
Thank you, Sitao. And of course, we could continue this conversation for much longer, and we will keep coming back to this very wide topic, of course, here at The Sound of Economics. I would like to thank for your participation to our episode today. And this brings us to the end of this episode, which was part of Bruegel's focus on global China as seen from Europe, which includes as well our monthly newsletter, ZhōngHuá Mundus, to which we invite to subscribe, and the link is in the show notes. As usual, you can read in open access all the analysis by our scholars on our website www.bruegel.org. Sitao, Alicia, thanks again for joining this conversation. Thanks to our listeners for following us. Until next time, bye-bye.
Bye.
Thank you, bye.